crypto tax also depends on how long you hold your crypto. If you hold crypto for less than 1 year, it is called short-term capital gain. This is taxed like normal income, and usually at a higher rate. If you hold crypto for more than 1 year, it becomes long-term capital gain, which has a lower tax rate. This is why many long-term investors pay less tax. A very common question is, do you pay tax if you don't cash out? If you only buy and hold crypto, you usually do not pay tax. But if you trade Bitcoin for Ethereum, even without cashing out, that trade is still taxable in the USA. Yes, crypto-to-crypto trades are also taxed. Now you might be wondering, how does the IRS track crypto? Most large exchanges like Coinbase, Binance US, and Kraken share information with the IRS. So hiding crypto activity is risky and can lead to penalties or fines. The good news is, you don't need to be a tax expert. Most people use crypto tax software to calculate gains and losses automatically. Popular options include CoinTracker, Koinly, and TurboTax Crypto. These tools make tax reporting much easier. Did you know that many people in the United States lose thousands of dollars every year just because they don't understand crypto taxes? If you buy, sell, or trade Bitcoin, Ethereum, or any cryptocurrency, this video is very important for you. Today, I'll explain crypto tax in the USA in very simple language. No confusing terms. Perfect for beginners. In the United States, cryptocurrency is treated as property, not cash. This means the IRS treats crypto just like stocks or real estate. So whenever you make a profit from crypto, it can become taxable. Many beginners think crypto is tax-free, but that is not true. Now let's talk about when crypto becomes taxable. You may need to pay crypto tax if you sell crypto for US dollars, trade one crypto for another, use crypto to buy goods or services, or receive crypto as income. For example, if you buy Bitcoin at $20,000 and sell it at $30,000, the $10,000 profit is taxable. But here's some good news. Simply buying crypto and holding it is usually not taxable. Also, transferring crypto between your own wallets is not taxable. Here are some common crypto tax mistakes beginners make. Not reporting small trades, ignoring crypto-to-crypto swaps, losing transaction history, and thinking crypto is completely anonymous. Avoiding these mistakes can save you a lot of money. This video is for educational purposes only. I am not a financial or tax advisor. Always consult a certified tax professional. If this video helped you, like and subscribe for more crypto education. And comment below, do you think crypto tax is fair or not?